This is Matthew Cratter from Trader University, and today I want to talk about Bitcoin loves money printers, especially talking about Janet Yellen and Jerome Powell. Now, in the old days, all we had was gold to measure this toxic radon gas that's present, that's created by central bankers. You all know about radon detectors. It's this poisonous invisible gas. Well, central bankers are not invisible, but they are poisonous. Fortunately, we have a detector now. It's called Bitcoin. And when it smells money printing, when it detects this, it goes up. This is one reason we're seeing Bitcoin melting up so much over the past few weeks since the election. We just got news that, yes, indeed, Janet Yellen, who used to be the head of the Federal Reserve, the chairman of the Fed, is now going to be Treasury Secretary. This is the same person who said that she expects to see no new financial crisis in our lifetimes, which is ironic how these people continue to get jobs when they're so bad at what they do and when they're so wrong. But what the stock market is enjoying about this and what Bitcoin is enjoying is that the US dollar will be continued to be devalued against real things like gold and real estate and stocks and Bitcoin. And the thing about having Janet Yellen at the helm of the Treasury, she knows all the people at the Fed, has a working relationship with them, obviously. And so it's going to be very, very easy to have a form of what's essentially MMT. The Fed, the U.S. Treasury will issue debt for the U.S. government. The Fed will print money and buy it. Hopefully Jerome Powell has bought some new ink cartridges for the money printing that's about to happen. You can see that he's definitely accelerated since the last time we took a look at him. Now, this is all somewhat baked in the cake. The Trump administration was extremely irresponsible when it came to deficit spending, and it looks like the administration under a Biden administration and Biden Democrat-controlled House of Representatives will actually be more irresponsible in terms of deficit spending. It almost doesn't matter who's president. We have this situation where government spending, currently official spending for the last 12 months, has been about 7.6 trillion, and tax revenues have been only about 3.4 or 3.5 trillion. What this means is you have a deficit. That's where you spend more money than you're bringing in, and you need to issue debt to pay for that. That's what the U.S. Treasury does. They're going to issue a lot more debt, and they're going to increase the U.S. national debt in the process of doing this. Now, this is something that higher taxes will not solve. You could actually confiscate the wealth of all of the U.S. billionaires, and you still would not be able to balance this budget over the coming decade. So as I said, it's also pretty much baked in the cake. We're going to see the Fed's balance sheet, as we've been talking about all year, continue to grow. This is basically the assets that the Fed holds on their balance sheet, and they buy them with printed money. We can see that the amount of debt that they're holding has continued to go vertical. This is U.S. Treasuries. They're being held by the Fed and paid for with printed money. All of which is to say the run in Bitcoin should continue for these reasons, especially the combination of Janet Yellen and Jerome Powell. It's a match made in heaven if you want to print money, devalue the currency, and drive up asset prices for wealthy people, mostly because wealthy people own the bulk of the real estate and stock market in the U.S. This is the irony of these kind of policies. And when people vote in Democrats, they think maybe it's a vote against the rich or a vote to help the poor. But it doesn't matter who's president. It doesn't matter whether it's Republican or Democrat. We get the same money printing policies because this is good for the people who work on Wall Street. This is good for the people who spend their whole life in politics and in banking, like people like Janet Yellen. So what is Bitcoin responding? How is it responding to this? I think that, I should say before I go on, if you're finding this video helpful, be sure to hit that subscribe button. You can click right here on the screen, or you can click below, and I'd appreciate it if you subscribed. Cathie Wood from ARK, who was really a pioneer in pointing out how well Tesla was going to do, is now saying that Bitcoin could hit $500,000. So we have the Winklevoss twins, we have all these billionaires talking about it, and we have Cathie Wood now telling her readers on November 20th that she thinks Bitcoin could definitely hit $500,000. Plan B points out that we really haven't had the melt up yet. We haven't had the really large monthly gaps. These are monthly closes for Bitcoin. And we can see where these red arrows are, that in the last two bull markets, after the last two halvings, we had these really big jumps, these gaps, and we haven't really done that yet. So what Plan B suggests, and I agree with him, is that we do have a couple months coming here where we're going to see 50, 30, 40, 50, 60% monthly returns, not annual returns, but monthly returns. This is what happens at this point in the Bitcoin cycle. Jay, in my comments from a video yesterday, I believe, asked a really good question. They say that 2.7 million Bitcoin is held on the exchanges. These are the crypto exchanges where you can buy Bitcoin. Is that high or low? And that reminded me of something that I wanted to talk to you guys about. This is a chart from Glassnode. This is a paid subscription service, but it's a very interesting thing. It shows you the number. So the gray line here is the price of Bitcoin. And if we scroll down here, we can see that this is really covers the last 8 to 10 years. We have the price of Bitcoin, and then the orange is the number of Bitcoin, not the dollar value, but the number of actual Bitcoin that are being held on these exchanges. So if you open up a Coinbase account and you buy some Bitcoin and you just leave it there, which you should never do, it can be stolen. That's why I always withdraw my Bitcoin and hold it on a hardware wallet like a Trezor. But a lot of people have been holding their Bitcoin on exchanges, especially if you look at the last bull run when Bitcoin went to nearly 20,000. We can see how the orange line continued to go up the entire time. Even after the crash, people kept their coins on the exchanges. What we're seeing right now is more a symptom of institutional behavior and hodlers at work. We're seeing this divergence here where the price of Bitcoin is going up, and yet the number of Bitcoin held on the exchanges is going down. What this means is that the people who are buying Bitcoin or who hold Bitcoin on exchanges are withdrawing them, presumably into cold storage. If you're trading Bitcoin, if you want to spend it right away, if you're going in and out of it, you're not going to withdraw it from an exchange, because then you can't trade it right away. You have to move it back onto exchange before you trade it. So what this shows is that the hodlers and the long-term institutional investors are taking control. Now, what this is doing is creating a very large Bitcoin shortage, simply because as the number of Bitcoin continue to go down, we have miners producing new Bitcoin, but they are not producing as many Bitcoin as they used to before the May 2020 halving. They used to produce 12.5 new Bitcoin per block. Now they're producing half that, 6.25 Bitcoin per block. So what we're going to run into if this trend continues is we're going to run into shortages on the exchange, and we could reach the point where even smaller exchanges don't have any Bitcoin to available to trade or to buy. I think American Hodl puts this really well. He's always a little bit hyperbolic, but I think he's right. Once we drain the exchanges, the moon mission is underway. At first there will be shortages, random, only on some smaller exchanges, then all the big ones, then the big ones for days, for weeks, for months. No one is ready for what's coming. And I think that's right. There are only 21 million Bitcoin. A huge number have been lost. A huge number have been locked into cold storage forever. I'm never going to sell my Bitcoin in this lifetime. And you have a lot of people thinking this way, which is going to make Bitcoin really the scarcest asset on the planet, or in the solar system, I should even say. Here's Dr. Bitcoin MD polling people saying, what is the highest valuation for Bitcoin, for the value of one Bitcoin that you've seen among someone respectable? And he's been talking about $25 to $50 million per Bitcoin in the next 20 years, which is bullish even for me. Preston Pish, who's a very smart guy in the space, has been in the space for a while, is sort of a thought leader. After a certain point, measured in terms of fiat becomes worthless, I would suggest the buying power of one Bitcoin may have the purchasing power of $5 to $15 million US dollars today. This is when it becomes a reserve asset for all the corporations in the world, and probably a few central banks. I think it's very reasonable to see $5 to $10 million Bitcoin over the next 10 to 15 years. So I would agree with that. A lot of people, though, unfortunately, are still trying to time this. They're still trying to trade this, trying to buy Bitcoin on a pullback. And I think this is a mistake. It's one thing if you want to trade it, it's fairly volatile. But if you want to hold it for the long term, and if you believe Plan B stock to flow model, as I do, if you think we're going to hit 100,000 by the end of next year, if you think we're going to hit 500,000 in the year after that, if you think we're going to hit $1 million per Bitcoin in the coming years, why would you want to trade this too precisely? It's very, very difficult to do. What I always say is if you want to buy Bitcoin and you want to hold it for the long term, you should probably just dollar cost average. Again, that's not investment advice, but that's what I've been doing over time. If you buy in Bitcoin dollar cost averaging, that just means that you take a fixed dollar amount and put it into the market maybe once a week or once a month or every couple months. So if maybe you save an extra $200 every 2 weeks, you could put that into Bitcoin every 2 weeks at the current prices. And as such, you'd be sort of dollar cost averaging, and you wouldn't be buying too high, you wouldn't be buying too low. And I think that's a better strategy in terms of rather than trying to market time Bitcoin, especially in this bullish phase where we just are seeing such very strong up moves with very small pullbacks. Finally, wanted to finish with two quotes, one from Pierre Rochard, we've been talking about Bitcoin versus gold and how Bitcoin is going to take market share from gold. And what I like about Pierre Rochard's, who's another real thought leader in this space, what I like about his tweet is that this is how you're going to recognize the Bitcoin peak. It's not a price measure, but when adoption reaches 100%, we could call it 90%, somewhere around that, when all non-Bitcoin assets have been demonetized down to their use value. So when real estate's been demonetized, no longer functions as a store of wealth, when gold has been demonetized, when I guess stocks would be demonetized as well under this way of thinking, and Bitcoin would be the global reserve asset where corporations, central banks, countries, billionaires, and everyone else stores their wealth. Now, this is a very extreme scenario, but I think we have seen, especially in the digital space, it tends to be a winner-take-all situation. So you have something like Facebook. There are obviously other social networks, but something like Google or Amazon or Facebook, if you win the space, you seem to take a huge majority of the market share. And if Bitcoin does succeed, which I think it's going to, it should take a huge percentage of the market share from gold and real estate and these other things. So for example, real estate would still have use value. We all need shelter. We need a roof to live under, but it would no longer function the way it functions if you go to New York City, if you go to Manhattan, or if you go to Vancouver, British Columbia. You'll see these empty multi-million-dollar apartments or condos or houses where Chinese or Russian money is being parked overseas, or wealthy Americans are parking their money simply because they don't want to keep it in the bank account. The interest rates aren't high enough. And so real estate really functions as a store of value in this way. And it is at risk of eventually being demonetized by Bitcoin. Bitcoin is, you don't have to pay property taxes on it. There's no maintenance. You don't have to you insure it and buy a burglar alarm for it. You can just withdraw it, hold it on a hardware wallet in the safety of your own home, or you can hide it somewhere. You can memorize the seed recovery, and you could even cross borders with it. So it's much more flexible than real estate or gold for that reason. It's much easier to transport, to assay, to verify, etc. And so it does really have these advantages over traditional stores of value. Finally, I wanted to end with a Warren Buffett quote. Warren Buffett has been wrong about Bitcoin since 2009, calling it rat poison squared, but I think the principle of this quote is still really good. Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. I would change this to when it rains Bitcoin, and I would change the metaphor in that way. But I think this Bitcoin opportunity, and one reason I keep talking about it so much, it's one of those very, very rare opportunities that only comes around once a lifetime. And that's one reason I'm so excited about it. We have these huge institutional tailwinds, institutions buying on every dip. Whenever Bitcoin goes down a little bit, the institutions come in and support it. And I'm convinced that Wall Street is getting ready to really pump this. And what that will do is just increase Bitcoin adoption, awareness of Bitcoin, Bitcoin as the brand, and help it to really take over the entire financial system. As Raoul Pal says, Bitcoin is the cockroach of the financial system. It keeps spreading, it keeps taking over everything, and you cannot kill it. People who've declared the death of Bitcoin, people like Peter Schiff, have been wrong. And here we are about to hit new all-time highs with Bitcoin. It's about 19,300 as I'm recording this, and I wouldn't be surprised if we're above 20,000 by the end of the week. Again, I have no idea about the short-term price action, so dollar cost averaging probably does make the most sense if you want to invest in this as a long-term investment. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.